Hi, my name's Michael Gilmore and I'm the writer of WizBank's blog, and it's so good to have you guys here with me once again for taking a look at episode or week 15 of the industry analysis. I must admit, I do like doing these, and every week it creates a bit of a discipline for me to pull out the data, see what we can find, and really get stuck into what is going on in the domain industry, particularly in a monetization perspective. A lot of people out there, I get asked this question all the time: isn't monetization dead? Let me tell you, it's definitely not dead. There is just so many people making so much money from monetizing their traffic. And fundamentally, it comes down to this: domain traffic is valuable because advertisers want the traffic. And if advertisers want the traffic, that's all good for me. Yeah, so domain monetization is alive and well. So what's happened this last week? I want to just highlight a few things here. The first one is this: is that we've really seen there's been a bit of a swing around with both Google and direct advertisers. Remember a few weeks ago, I made a prediction that due to COVID and the impact of that terrible virus on the planet, is I predicted that everyone's already had used up all of their vacation time. Therefore, they're going to be working through the summer period. And that ultimately we're going to see a 5% uplift in revenue numbers, not the traditional 15% downswing, which happens during the Northern Hemisphere summer period. Yeah, so we're seeing that uplift right now. So it's a really interesting to see whether my prediction is going to be right or not. I got to have a lot of reasons why that's the case. But anyway, so the other thing I put into this presentation is a few extra slides so we can see what's happened since July last year, which it gives an additional insight for what is going on in this fantastic industry of ours. So without further ado, let's get started and see how we can go. Okay then. All right. So domain industry update. Week 15, here we go. So normalized RPM and RPM trends, what's going on there? Now, I've done some changes to this chart, just to let you know that the trend lines, I've now made a fifth order polynomial, because as it goes across time, you can't see the swings or roundabouts. So I've done that. And you can see that both the blue, which is the normalized RPM, and the red, which is a traditional RPM, they're both swinging upwards, which is a great outcome for domain investors, something which I know I'm happy about, and all the ParkLogic clients are very happy about. Okay, so monthly normalized RPM. So this is my first monthly chart. Now, it's a bit difficult to see what's going on here. And you notice the RPM is on the left axis, while the normalized RPM is on the right axis, because normalized RPMs typically masses of more traffic, lots of traffic. So when we take a look at this, the RPM, which is in the, the RPM is in the red, actually. I should have put a legend on here. I do apologize for that. RPM in the red is it's looking pretty good because it's trending upwards, but then we've got the normalized RPM is trending downwards. Now, is that a time for us to all start to panic? No, definitely not. It could have been that there was a whole lot of traffic came in, which was not monetizable from domain. So what's one of the weaknesses at an aggregate level of the normalized RPM? At a domain level, it's brilliant, thumbs up, but at an aggregate level, it can distort some numbers. So let's imagine you have a domain comes in, it has like, I don't know, 50 million unique pieces of traffic a day, then it can alter the normalized RPM a little bit. So we've got to look at that with a grain of salt. Okay, so earnings per click. This is one of my favorite charts I love to hate. The earnings per click and also the CTR. So what's going on there? Guess what? It's the mirror dance. Like it's just ridiculous. And I must admit, in the end, I decided I'm going to show you a chart which is just the trend lines for the earnings per click and the click-through rate. But there it is. So you can see that, gee, when one goes up, the other goes down, and vice versa. Surprise, surprise. But the crazy thing, though, with this is that it is really just a bit stupid. And if someone from Google or anyone else can please explain this chart to me of how as advertisers pay for more traffic, then the CTR goes down, then please let me know. I would love to go along and find out more information on that. But anyway, so here it is now at a monthly level. And of course, guess what? Inverse relationship once again at the monthly level, at the day level, whichever way you look at it, there's always that inverse relationship. Okay, moving on. So the volatility index. So what's actually going on here? So you can see we had a brief surge and expansion last week, and then it fell off. This is the overall volatility index. Yeah, so look, to be quite blunt with you, you always get that. You really will, because the way the volatility index is looked at. For instance, see where it went down a few weeks ago, and where it really collapsed downwards. And let's see if I can get it on the screen here. There, where it went right down here. Of course, it will jump back up again because we're comparing against that low point. So that's what's actually occurring. So there'll always be some bumpiness, but it's definitely I guess the thing I look for is the shape and the trends of the graphs over time. And it's definitely a different relationship compared to when it was in the middle of COVID. Although I've just heard on the news recently, it looks like there's like wave 2 of COVID coming through, and that's just a terrible situation. And you look at the numbers in the US, they even posted a news article suggesting that the US has got actually 20 million infection cases, not 2 million that's initially thought it has. Terrible, terrible situation. Okay, so revenue split between Google and direct advertisers. So is it worth doing anything with direct advertisers? And the answer is yes. Now, there has been definitely, you can see that trend clearly there where Google has really fought back this year. Remember I told you that the previous year, it was actually almost flipped, like the direct advertisers are winning so much of the revenue. I think direct advertisers are having a tough time right now, to be quite honest with you. That's the direct advertising networks. And because let's face it, there's no one's traveling, so all the travel vertical's gone. No one's buying houses. All the housing markets is gone. And when you look what's going on, the direct advertising networks are trying to get other players in there to fill those gaps, but it's really tough. It really is tough, particularly when to use another direct advertising network, say other than Google, you have to be reasonably sophisticated. So all of the new small to medium-sized businesses have come in on board. They're new. They're relatively new, and they're more focused on like, how the heck do I actually fulfill an order and all that sort of stuff. So I don't think they're going to be going to the tier 2 type networks yet. They're going to be sticking with Google and the mainstream and so forth. So I think the direct advertising networks will swing back again, but yeah, it's just going to take some time. It really is going to take some time because you can't have your business shut down forever. So I don't know what's going to happen with travel. We're seeing some terrible things here in Australia. We're essentially a great big island with a huge moat around it, and the government said no one crosses the moat unless they got a really, really good reason. So there's no travel. Okay, so let's just move on from there. So what's happened with the traffic split? Now, there has been a slight decline by Google winning the amount of traffic compared to direct advertisers. But look, it's real noise. But I keep on coming back to this. If you don't have direct advertisers in your mix, though, you're missing out on 30 to 40% of the revenue that you could potentially get, that revenue uplift. Even though only like but less than 10% of the traffic is won by the direct advertisers. It's like, just to be quite blunt with you, massive impact to the revenue line. So if you've got all your domains, say, with a single parking provider, you are missing out on revenue. Okay, so what's going on with the Google versus direct advertiser and the normalized RPM? This is the chart I love looking at. Once again, I changed everything to a fifth order polynomial this time, so both trend lines. So we can see the trend line swung up, although even though Google in the last week has really had a bit of a dive down, the trend is just going upwards. And likewise, you'll see the same thing with the direct advertising networks. It's swinging upwards. So maybe I am right, and we'll get a 5% increase across the summer versus the 15% decrease. Whatever it is, from a monetization perspective, if you're not experiencing a boom in your numbers, then you're not with the right organization to monetize your traffic. That's all I can say on that, because we're seeing a boom. It's really exploding from a traffic perspective and everything. It's just going upwards. So that's a good outcome. So let's take a look at this in this last week. And you can see in the last week, the normalized RPM, which is in red, has been trending upwards for direct advertisers. And the normalized RPM for Google, which has been trending downwards, actually. Because remember, Google had that bit of a surge across the last few weeks, and then it's tapered off a bit this last week. So this is a 2-week snapshot, and it's one that you can begin to see that, hey, you know what, maybe those direct advertisers are getting some additional advertisers on their networks, which would be great news for us all. It's something I'd be looking forward to, that's for sure. Because anything which creates more competition for traffic is awesome. I love that. So let's take a look. Google percentage change. Like, look at that drop off down there in Google. That drop off is quite incredible. Just down here, that's the blue line. Well, the red line has really expanded up, and we saw that in the previous charts as well. But that volatility, Google was pretty stable, and then suddenly it's fallen off the edge of a cliff. It really has. That's a big change for Google. Like, it's going to be really interesting to see what happens. So moving forward, but the direct advertisers, once again, it looks like they've broken out of that cycle of the up-down cycle, even though the last data point is down. But there's quite a few which are in the expansion phase, and that's going to be really quite interesting. So it's what's going on then. We're in an expansion phase. It's tentative, but you know it could be there. So if you're looking at your portfolio and going, yeah, I'm not seeing that, hey, give us a call at ParkLogic. Love to be able to have a chat with you. And if you're watching this video and saying, wow, that's a lot of data, trust me, I try to release a new bit of data every single week, so make sure you subscribe and that sort of stuff, because I like to keep it up to date with what's actually going on in the demonetization side of the industry. Remember also that the domain monetization actually underpins so much of the industry. Like, basically the wholesale market for domain sales is underpinned by monetization. So the reason why I buy a domain is because I've got parking revenue in, and I buy it on the wholesale market. And that's generally speaking what is actually occurring. So the fact that we're getting this uplift in monetization revenues is occurring is a great thing, not just for monetization, but for the wholesale sales of domains, and also for the entire ecosystem. Let's face it, let's think about this. If there's an uplift in revenue, that means domains will be more profitable. That means that they won't be dropped. So registrars benefit. Registries benefit as well, because they're not being dropped. And it just cascades right down. So when you think about 30% of all domains in the world are actually held for investment purposes, and the great majority of those are being monetized. So that's this week, and I'm looking forward to the coming week as well. Anyway, thanks a lot for that.
I hope you enjoyed that video and you find them really valuable for your business and helping you make better decisions. Don't forget to like, subscribe, or pass the video on to your friends. Anyway, thanks a lot for that. Have a great day. Bye.